You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from your own personal favorite option source, at least I hope, or one of them, the Options Insider Radio Network. 13 programs on said network. You can go find them all pretty much anywhere you find your finer podcast programs, iTunes, Stitcher, Aha Mobile, TuneIn, as well as, of course, our website, the mothership, the flagship, theoptionsinsider.com. Hit the homepage, click on the Insider Radio Network tab at the top left corner, and you're off to the races. The overlay will pop up, and then choose your show, and you're off and running. You can choose from over 400 archived episodes of this here program, the Option Block, as well as many, many hundreds of others on other shows. So no shortage of options goodness. If you're in the mood for some options listening, then we have you covered in spades. And of course, if all that is too much trouble, if you can't be bothered to surf to the website or go hit the button to subscribe in iTunes, then just grab our mobile app available for iOS, Android, and the Fire OS. You download that app once, and it's all pretty much baked in there, so you can build your own playlists of episodes, of shows. You can stream them, you can download them, you can store them for offline listening, and then if you have a question or a comment, you can let us know right through the app. It's all baked in there, pretty cool. Check it out, the Options Insider Radio Network mobile app. All right. And joining me on the old program today, starting off with he of that tropical paradise known as lovely St. Charles, Illinois, Mr. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here in the tropics.
Yes, the tropics that are St. Charles, Illinois. A balmy 85 and sunny there today, is it not?
We're only probably about 84 today, so it's a little bit chilly today, but we can handle it.
There you go, listeners. Check your tourism guide right now if you didn't know of this tropical mecca here in Illinois called St. Charles, Illinois. Check it out. I can't guarantee, but I think you might like it. Uncle Mike, I'm sure, can guarantee those kinds of things. We are also joined on the old program today via the magic of this technology they tell me is very cutting edge, is going to be big in the coming century, called the telephone. I'm not sure how they pronounce that. Mr. Viceroy himself, Alex Jacobson from Options Express by Charles Schwab. Alex, welcome back to the program, to you as well.
Good to be here today, and today was a real interesting day. Nasdaq back over 5,000, VIX under 13, so a lot to talk about today.
Yeah, a lot of historic levels, and I think without further ado, let's get right to it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we dive into what was trading, what caught our eye in today's broad market activity. And as Alex alluded to at the top of the page, was an interesting day for some of those historic averages and those historic levels that people like Uncle Mike and others like to keep an eye on. We're always talking about the S&P out here. S&P surely rallying, but it was in particular the good old Nasdaq that really caught everyone's eye today, with the Nasdaq hitting that historic all-time high level of 5,000. It's a bit like the article we were reading this morning. Is it late to the party, but better late than never? So interesting stuff. And since we're talking Nasdaq, since we're talking still a predominantly tech-heavy average, even though it has broadened quite a bit, we'll start in Uncle Mike's neck of the woods. Uncle Mike, what caught your eye in today's activity in addition to your beloved Apple, only up 0.5%, so I'm not sure how you sleep at night.
I don't know. I mean, when they're not delivering 4 percentage points in a day, I mean, it really ticks me off, you know. A couple things that caught my eye today. First thing was oil, actually. Had another down day, and nothing huge, but once again, I think if you're an oil bull, now might not be a bad time to get in. The market's giving you another opportunity to come to the party, so to speak, and since we're talking parties. And other than that, the other thing that also caught my eye, obviously, was the S&P. I've said it before. I'll say it again. Never in the history of the entire stock market has there ever been a better time to sell than right now. However, I think we have a lot of momentum going, and I think the party is just beginning with the S&P 500.
There you go. Back on the diehard bull train, sir.
It pains me to ever get off of it.
Well, Alex, you alluded to a couple interesting things that caught your eye today as well. Of course, that historic level out there. I keep wanting to say the Qs, but it's NASDAQ, of course. So we'll talk about the broad NASDAQ. Let's start there. Obviously, that's a pretty historic level. People have been waiting for that round 5,000 level for quite some time. We finally hit it today. So those people who were perhaps in the laggard camp saying, well, you know, NASDAQ's lagging behind, maybe we're not still in full-on bull mode, now they don't really have much of an excuse. So tell us, in addition to that, Alex, what caught your eye out there today?
Well, it's what was driving NASDAQ higher today that really, I think, is the focus. It was biotech. NASDAQ is heavy to biopharma. Amazon, one of my perennial favorites, added another $5 today. It's up about $100 since the earnings announcement, and that weighed on it a bit today. But, you know, to Mike's point, oil had a very narrow range today, but the oil stocks did a whole lot worse than the actual underlying future did. So there were a number of cross currents today. John Grigas, who runs the trading desk, actually reached out to me today before I normally reach out to him and say, you know, what's happened on the desk, and reiterated the amount of activity we'd had in Lumber Liquidators after the 60-minute story last night. And he said our customers were buying the 30 and 35 puts. Now, not every expiration had a 35 put. They will. But they were buying them in kind of retail numbers, 50, 100 at a time, getting filled, almost waiting for markets to reset. It wasn't like they bought thousands and thousands blocks, but they bought thousands in 50 and 100 blocks, kind of taking the liquidity out of the put market. But a lot of activity in Lumber Liquidators today.
Yeah, that, of course, riding on the heels of our friends over there in 60 Minutes, really ripping Lumber Liquidators. A bit of a new one today, to use the technical term, and the stock taking it on the chin as a result. As a name, closing today down 25% to right just under $39 to close today. This is the name that does, on a given day, about 5,000 contracts a day, doing well over 60, close to 65,000 contracts today. Surprisingly, puts only outnumbering calls by about 1.5 to 1 on a day when the underlying is so biased in one direction, you tend to see a lot of flow in the put side of the fence, and clearly, as Alex alluded to, you did see a lot of that today. But there was some call activity, too. Predominantly, I'd imagine, selling of any open interest that is still out there, but it could have been a few moments when the stock stabilized during the day and some diehards may have come in and tried to scoop the dip, only to be horribly and woefully disappointed, but still a very interesting one. And other stuff going on today, of course, we've talked about it a few times over the past few weeks, but today is the actual day where we're seeing the good old VIX options hours expanding. So for all of you out there who've been arguing for expanded hours of different products, here you go. If you're trading the VIX, then I'm sure you're excited about this one out there. Of course, we have Mr. Sebastian will be joining us in a little while. He can, of course, pontificate about all of his chat mentees over there who are benefiting from the expanded VIX trading hours, at least the ones that are overseas and not subject to our hours over here. From an earnings standpoint, it's kind of winding down this week. We do have Caesars Entertainment after the bell today, but it's not really a traditionally big options name, big options mover. Of course, ticker symbol CZR, closing today at a whopping $11. Let's pull up here their weekly straddle going out at about, looks like $1.25, $1.30 or so. We'll see how that reports in the after hours to get a sense for if Caesar could perhaps be a big mover for us going forward. It looks like in the after hours, actually, they're already out, and the stock's off about a dime. So there you go. Straddle buyers out there, premium buyers out there, and Caesar perhaps a wee bit sad at the end of the day. And of course, some other things looming on the horizon. Uncle Mike does like to play in the Apple neck of the woods. We do have the Apple, this of course, around the block. We'll talk about a little bit in the trading block as well. Apple's big event coming up on the 9th, where they're going to talk about the watch and probably some of the other big events. Uncle Mike, have you been tuning in with ever-growing gusto as the watch fear grows? And Alex, also, have you had a chance to try out your beta model yet?
I guess I'll go first on this one. It's the anticipations in there for sure. A lot of it, I think, that is priced into Apple already with the hype. I could see Apple coming up after the watch, even if the watch isn't too terribly exciting. I could still see Apple rallying. But if it's not, like, let's say it becomes a ginormous flop, which I don't see it being, I really don't see Apple pulling back too much just because of the just enormous iPhone sales that are going on right now.
And Alex, have you had a chance to play around with your fancy, shiny new toy yet?
I have not, and I'm going to break everyone's heart by letting you know I have to turn it down because of the Schwab gift policy. So I won't be a beta tester, although I very much wanted to be a beta tester. I even raised the issue of paying for it, and that basically just raises the conversation to go buy one when they're out. So I'm not going to be able to be a beta tester.
That's a shame. That's one of the cooler benefits of being on this show, I must say, is getting something like that.
Way. I'll beta test it.
I'll bring it up.
Okay, that's fine.
Yeah, they don't have those kind of rules over there at RCM. It's a Wild West. No, that's funny, actually, the Schwab and lunch. Even if you paid for it, that is kind of funny. Tell them getting it early is part of the fun. Because call Chuck up and say, hey, I want it early. I want to play with it a little bit. That's the fun part. If I get it after everyone else has it, it loses some of the luster.
Yeah, I'll pull him out of a board meeting and see how that goes over.
Yeah, I think so. But you're right, Uncle Mike. This is a bit of a weird setup. We haven't really seen this in the past with Apple. Usually when they have an event coming up, it's for some mystery product. I mean, a lot of it may have leaked ahead of time, but there's been no official confirmation of that until the event. Now we have for the first time, we're going into an event where the product was actually announced 5 months before or something along those lines. So a bit of an interesting period there. And I think you're right, too. I think we have seen such a tremendous run up in the stock leading into this event and the rumors of the car and the watch and everything else and of course, the strong sales in China, that it is kind of hard to see how much more of a pop they could get out of the thing. But you never know. I've been proven wrong with Apple before, so we'll see how long this thing has to go. By the way, I know you like to set your technical levels in Apple. How long are you? Is your next level really when they hit about the pre-split adjusted 1,000 level? Is that what you're looking at next?
There you go. If we have, I think I was doing the math the other day. I think we need another 25% movement in Apple right now, and I think that's what makes them the first $1 trillion company. I think that's where it's at. I'd have to go back and check my numbers again, but that's kind of the longer range thought that I have on Apple. But for the time being, I'm just enjoying the ride, so to speak. And if it starts going down, I got to manage risk like we did the first time around.
What is it, about 142 or so, right? Because it was a 7-for-1 split, so it'd be about 142 for the 1,000, the mythical 1,000 level that eluded them last time. And,
I believe you're something like that, yeah.
So there you go. That's your next level. 142 call, sir.
We're going right to the $1 trillion market cap.
All right. With the Apple prognostication out of the way, we're going to keep on rolling right on into the next section. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. This is indeed the portion of the program where we break down some of the interesting options activity that's lighting up our tape here on the old optionsinsider.com. If you'd like to learn more details about any of these alerts that we're talking about here today, then by all means surf on over to that site, our mothership, theoptionsinsider.com. We have a lot more alerts and we get time to profile on the show, as well as a lot more detail on each of those individual alerts. So if you're looking for more detail, you want to check out something we talked about in the past, surf on over to the mothership and check it out for yourself. All right, now moving on out to a name we talked about a lot lately. This is good old XLE. This is, of course, the Energy Select Spider ETF out there. Been in the headlines quite a bit, along with USO and the WTI and Brent contracts, as crude has been on this protracted roller coaster ride for the better part of the last few months. XLE closing today right around 78.5, down about half a buck or so, about 0.75 of a percentage point. This is the name that does not surprisingly of late is doing some decent volume, just a hair under 100,000 contracts a day. Beating that even today to the tune of a whopping 130,000 contracts, lighting it up today. So what caught our eye today in the old XLE was a pretty sizable put trade. In particular, it was the March 75 puts, lighting it up to the tune of, when we profiled them on the site this afternoon, 50,000 contracts going up, paper selling for 70 cents. Not a bad trade because the options went out 55 cents at 60. So that was closing against open interest, sizable open interest, about 87,000 contracts open there. And then, of course, that wasn't the only side of the trade. No, this was a sizable trade any way you cut it. Our friend then, after closing out on the old March 75, decided, let's re-up on the old April 75 put strike. And so he did just that to the tune of a little bit less this time, 40,000 of those going up, paying $1.47. So he did that for 77 cents net on the spread. Actually, 87.5 because he did it on a ratio of 5/4. So interesting one. Our friend here perhaps taking some of these puts off the table here on the March 75 strike and then rolling them out to April. Probably with this kind of size, it's probably not an outright spec. It's probably someone rolling a bit of a hedge position against some other position he has out there in a broad product or in XLE or in a crude product or something along those lines. So our friend here, obviously not taking the bearish bet off XLE, but reestablishing and not even adjusting. A lot of times we'll see the out and down roll with the puts. He didn't go down to the 70 strike or anything along those lines. He pretty much kept it right here at the 75 handle. Mr. Sebastian isn't joining us, at least not right this moment, so we'll have Uncle Mike dive in instead because he is a known watcher of XLE and has been known to sling a few XLE puts and calls in his day. Uncle Mike, what do you have? What's your take on our friend here? Just not giving up the ghost, but just rolling on out to April and saying, hey, bring it on. 875 strike. I'm drawing the line here in the sand.
Well, I think what he could have done, or what would have been a little bit more beneficial, I think this is the, I'll try and think of a good technical term. This is the, I wish I would have rolled up a week ago roll, in that he just rolled out by just staying at the 75 level. But had he done this maybe a little bit ago when XLE was around the 81, 82 level, I think he probably would have been doing the same thing except rolling it up. When XLE was rallying, he may have said, oh, well, I'll wait a little bit more before I roll this, but it didn't continue to rally. It came back, and this is when he said, well, you know what, I do need to roll this at some point, so looks like we'll stick with the 75s again for next month. That is my theory, but I could be wrong.
Yeah, it's interesting. He's sitting on those marches. He obviously has some time to go in those. He could have let that position percolate for a little while before he decided to roll. So you're right. The timing is a bit interesting that he chose to do it now. It was a better setup last week. He could have rolled into a more favorable strike, and maybe he's deciding, get in while the getting is no longer as good as it was, but before it perhaps gets worse on me. Either way, still an interesting positioning. I usually probably will let that maybe percolate a little bit more before I bit the bullet so quickly. Our friend here in XLE, perhaps a little bit more trigger happy. He's slinging 50,000, so he's got to have some cash behind him, right? So we'll see. We'll keep an eye on that one as we move on into another name, Uncle Mike, I know you follow religiously. This is, of course, the National Bank of Greece. I know if you're like me, you can't start your day in the morning without a cup of coffee and your quote on NBG. Am I correct there, Uncle Mike?
All the time. It's coffee and grease, baby.
Coffee and grease. Greasy coffee. You go to your favorite diner there in St. Charles. There's only one. And then you get your greasy coffee and you're good to go for the day. And
we talk about the National Bank of Greece at the local coffee shop very frequently.
Every day. It's the morning bull session over there in St. Charles. Well, we were just talking if the XLE level was a little bit too rich for your blood, don't worry. We got you covered here on the old odd block with, again, the National Bank of Greece ADR. This is ticker symbol NBG. Closing today a whopping. Let me try that again. Closing today a whopping $1.47, down about a dime on the day. This is the name that really, what can you say about a $1.50 stock? It's an option in and of itself, but I know a lot of you guys love these cheapies in the old odd block, and we aim to deliver to the tune of, this is a name that does about 8,000 contracts a day, doing nearly 20,000 today, and pretty much the lion's share of that nearly 20,000 to the tune of 16,059 coming in a massive, I don't care if it's this name or any other name, massive 15,000 lot total of, like I said, 16,000 and change going up of the March. I love these handles. The 1/2 puts. Yes, I said the $1.50 put, listeners, going up, paper selling them for 19 cents. There is obviously some continued fear out there in Greece, which is clearly weighing on this name. And at this point, these puts are in the money. So our friend here could perhaps be drawing a line here saying he's comfortable picking up some sizable NBG here right around the 1/2 and south level. Interesting on this one. Clearly, let's pull up a chart here of NBG. We know recent headlines certainly haven't been too favorable to this name. It had a bit of a pop recently, just in late February, got up to about the $2 handle, and then immediately has pretty much given up about 50 cents of that since then. So whatever brief optimism was in there is now gone. And this fellow out here saying, well, you know what? I'm going to draw a line here a little bit south of the $1.50 handle. And if it drops there, I'm happy to pick it up in some fairly decent size. Uncle Mike, the trade on NBG notwithstanding, because I know you don't really trade this name, but can you think of a scenario you'd be going out there and writing 15,000 puts on the 1/2 strike in any name?
Maybe if I was doing something on like a natural gas or something like that with some size, and maybe if natural gas got that low, I would think maybe to do that. But in a stock for 100 shares, I don't think I've ever done anything that low. These are the kind of stocks that if you just have some money you want to do some gambling with, instead of going to the casino, maybe have a hunch, bet a bunch, buy some of these stocks at a lower level, and then maybe they'll roll on up, or just and then get out when they go from like $1.30 to $2, or just buy them at $1.30, forget about them, and then if for some odd reason Greece becomes the world power, then that stock's worth $100 and you're a genius. But if not, then it was only $1.30. aside from that, I can't say that I've ever really delved in stocks of this size, besides discussing them at the local St. Charles Diner on Route 64 Main Street.
Yes, can't forget about those morning bull sessions. Listeners, what a paradise St. Charles is turning out to be. Tropical weather, great, far-reaching, broad macroeconomic conversations at their local Greasy Spoon. I recommend highly you check it out. Boost that visitor count from about 6 last year to at least a dozen this year, so they know the option block is doing well by them. And speaking of doing well, we're going to move on to Uncle Mike's favorite name outside, of course, of the dollar stores, which he is a big fan of. But of course, he likes to look stylish, don't we all? And when he likes to look stylish, he likes to head to Mens Wearhouse. Of course, ticker symbol MW, trading today at $48.63. Taking it on the chin a bit after taking a pounding in the market to the tune of off about $1.50 or about 3% in the broad market today. And that isn't on the heels of earnings. They don't have earnings for another week or so. So just taking a nice drubbing out there in the old marketplace today. Is a name that does, on a decent day, about 1,300 contracts a day. Doing nearly 7,000 of those today. And what caught our eye, again, with the stock taking a bit of a pop, are some interesting trades out here. In particular, we saw a trader coming out scooping to the tune of 5,000 contracts, scooping the APE 50s for, let's see, what price did he pay here? Paying $2.05. Again, this is pretty much the primary activity out here. An interesting day all around, a day when the stock is getting crushed to the tune of 3%. That the primary activity we say out here is a massive call scoop. Usually you see it the other side of the fence. But today, apparently someone's saying this activity out here in MW a wee bit overdone and putting their money where their mouth is to the tune of, like I said, about 5,157 to be precise of the 850s. An opening trade, and no roll or anything along those lines. It's only 9 contracts open on this strike, and this appears to be what it looks like on the surface, a straight up outright bullish play on this name ahead of earnings, and perhaps taking advantage of today's little dip to say, hey, I like this stock still, and I'm going to put some size on. We also saw some upside calls to the tune of the May 52 halves going up for 1,000 contracts as well. I'll have to dig into those to see exactly what was afoot there. It looks like it may be closing because there's 2,600 or so open on that strike. But that's the only other real appreciable options activity we saw today. Everything else is pretty much a scattered 10 lots and 20 lots out here, except for this massive trade on the 850s. Uncle Mike, take it home. In addition to buying suits, I know you've been known to buy a few calls out in Mens Wearhouse in your day. Maybe not this size, but you love them.
You're going to love the way we trade. I guarantee it.
There we go.
Couldn't resist that one.
I knew you were going to go there.
The only other thing I could possibly think of as to what this could be, Mark, is maybe if someone has a massive short position, they're protecting this going into earnings, and then maybe they're just kind of buying some calls with which to protect the gains that they have on their short position. They're concerned that the stock might rally back after an earnings announcement, and they want some type of protection. But other than that, with the straight call buys with which you had mentioned, I don't see any other possible alternative.
Yeah, not a heck of a lot. We don't really talk about Mens Wearhouse a lot. It's not really a big options player, and yet today, someone out there is feeling the love for good old MW. So we'll file this one in the to-be-watched category. It won't be that long. These are only April calls, and we got earnings in a week or so, so we'll see if our fellow here is on the right track. Meanwhile, we're going to keep on rolling right on into the Viceroy's favorite time of the show. No, it's not the watch and hat extravaganza. That comes later. It's time for the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. As the name implies, this is the portion of the program where the Viceroy dons his fanciest of tour guide hats and brings us behind the scenes into the land known as Options Express by Charles Schwab. He already gave us a little bit of insight into what's going on the trading desk. We also get maybe some customer inquiries, some customer questions, what's going on the tech side, on the mobile front, a lot of things cooking on our various Viceroy tours. Mr. Viceroy, where are we headed into OX today?
So we're going to talk both OX and Schwab, and because I'm going to talk Schwab, I need to mention that Options Express and Charles Schwab are separate but affiliated companies and are subsidiaries of the Charles Schwab Corporation. That's the legalese. So Nina and Jim are out in New York for the Traders Expo, and Nina checks in a couple times a day because we share the educational role here at OX. And when I queried her as to what she was hearing at the show and what the inquiries were, one thing you run into a lot at shows are folks who are new to the trading community, folks who are what we call newbies, and they're looking for help, they're looking for education. So I want to talk about two very cool opportunities, one here at OX and one at Schwab. At OX, the virtual trade platform, and let me expand upon that a little bit. The question comes up a lot. I'm not traded. I'm going to trade. I've taken a class. I want to do paper trading is what we used to affectionately call it. In reality, it's virtual trading. There is a full virtual trade platform here at Options Express. Just come to the site, optionsexpress.com. You'll be presented with a virtual trade tab. Click it. You'll open a virtual account. Yeah, we're going to ask for your name and address and your email. And yes, we're going to market to you from that point forward. But there is no obligation in the virtual account. You can trade stocks. You can trade options. But you can't see every tool in the virtual account, and that has to do with compliance issues. But if you're a newbie and you want to get started, or maybe you're 14, 15, and you don't have enough money to open a gift to minors account yet, but you want to trade because you're taking a finance class in school and you want to play with a couple option strategies, open a virtual account. Doesn't cost anything. There's no obligation to put any money into it. Of course, obviously, we'd like to see it evolve into a real account. Another question that comes up a lot and comes up at the shows is, I'm a small investor. I only have, $500 or $1,000, and maybe I'm just not ready yet to start banging out, puts on the Bank of Greece or buying Mens Wearhouse and selling calls. But I'd like to begin in investing money. On the Schwab side, we have something called the ETF One Source. And what the ETF One Source allows investors to do is to buy from a literal family of ETFs. I think there are 200 names in there now, and they are commission-free. Now, there are some terms and conditions. You can't start buying in the morning and selling in the afternoon. You can, but not qualify for the free commissions. But if you want to do things like some of the broad-based or international indexes or big cap or small cap, there's a whole series of them there. Some are Schwab, some are Guggenheim, some are, some of the other fund companies, and even though they're free to trade, there is a fee embedded into them. There is a management fee, but for many of the Schwab names, that management fee is as little as 4, 5, 6 basis points a year. So if you're looking for inexpensive access to the markets, a number of names you can trade for free. There are bond ETFs there. Again, no commission to buy or sell. There are management fees, and that's all disclosed in the ETF One Source. In fact, when you land, there's a chart you can look at that shows you what the management fees are, who the fund companies are. As I say, some are managed internally at Schwab, and those are very inexpensive to trade. But if you want to get started, you see Nasdaq at 5,000, you think it's a breakout, you want to get exposure to the Nasdaq market, you can find some very inexpensive ETFs you can trade that will give you exposure, and they'll trade commission free. So 2 resources that are worth visiting: virtual trade for the person who wants to paper trade and learn how to trade and maybe throw some option strategies around and see how they perform. They hear us talk about a strategy, we talk about a broken wing butterfly or an iron condor, and you want to play with one. Go into virtual trade. If you're an investor and you're not looking to commit a lot of dollars at this time, open an account at Schwab. Look at the Schwab ETF. One source, you want to get exposure to a broad market index or a bond index or an international index. Very inexpensive ways to do it. One last reminder, if you're a new account to Options Express, the $150 Amazon gift card for a funded account. There are terms and conditions that apply. Visit the site for more details.
Thank you for that, Mr. Viceroy. A far-reaching Express Block today. We always love our little adventures into the land known as OX by Charles Schwab. Visit, of course, optionsexpress.com to check out all those fun tools, information, and indeed that Amazon gift card Alex was alluding to. And now it's time for us to keep on rolling with the show because it's Monday. It's time for the Strategy Block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, you know what time it is. The Strategy Block is usually the portion of the show where Uncle Mike comes on down from the mountains to dispense some options, wit, and or wisdom. But because we have a late joinee joining the program today, fashionably late as always, Mr. Mark Sebastian from OptionPit.com. Welcome to the program, sir.
Hey, good to be here. It's sorry it took me so long to get on. I was busy being famous in other realms.
Or perhaps infamous,
just
depending
kidding
on how you define that, yes.
Yeah, no, just kidding. Really interesting day today. And, I hope you guys at the top of the show were talking about that 10-year low and realized volatility in the Russell 2000. I just am, Alex and I last week, what were we talking about? A 12 VIX and a slow grind higher. And what are we seeing? A 12 VIX and a slow grind higher. In fact, if you look at that VIX, you might even see that that it is extremely overpriced. One little piece I did notice was that while at the money vol is somewhat low, the thing really holding the VIX higher is an incredibly steep skew curve. So kurtosis, those that are buying out of the money puts, are really what's holding up VIX. And then finally, that spread between March and the VIX cash continues to be wider than a Mack, so wide you can fit a Mack truck through it. And traditionally, a lot of people think it's the VIX future that's right. Traditionally, it's been the cash that's been the driver. So those are all, there's my quick bullet points for the day.
Since we're doing quick bullet points, you did miss the odd block. So if you have a strat in you, if you're up to the challenge, I will allow you the opportunity to take over the strategy block instead. Otherwise, I'll allow Uncle Mike to do his thing.
Yeah, you know what? I will absolutely. Mike doesn't absolutely. So today on the strategy block, what I want to talk about is how volatility can give you a delta. I was having a nice discussion with some traders today, and I was talking about an at-the-money straddle. And I said, well, I want to hedge this at-the-money straddle with a short VIX position. And they said to me, well, why would you hedge that with a short VIX position when, if the market rallies, or if the market falls off, your VIX position will lose, and this trade is delta neutral, so you don't care what way it goes. Well, then the discussion led to, okay, well, really, how does a straddle make money? All right, and so my first question was, well, if the S&P keeps acting the way it's been acting, and we have a slow rally higher, all right, is my straddle going to make money, lose money, or break even if, let's say, 2 weeks from now, we're 30 points higher? And, the answer across the board was, well, you'll probably lose some money. I said, well, what about if in 2 or 3 weeks we're 30 or 40 points lower? And the answer was, well, you'll probably break even to up. And then I said, well, what about my VIX future? If we sit here or we grind higher, am I going to make money or lose money? And the answer was, well, you'll make money. And what about if we fall? They said, well, you'll lose. And that's actually one of the things that traders need to recognize when they're using complex strategies, is that even if a trade at onset is delta neutral, the fact that it has a vega component and, to a lesser extent, a theta component can cause a position to have what's called a sneaky delta. So even if it doesn't actually have a market preference, a trade or position may actually still have a market preference. And that is why you need to understand your Greeks, or get somebody like myself or a Mike Tusaw or a Mark Longo to explain to you all this stuff. And that is strategy you can trade off.
The sneaky delta. I like that. We can probably spend a lot of time discussing sneaky deltas in a myriad of different scenarios.
Yes, well, and the sneaky snacky squirrel actually sneaks sneaky deltas. I don't know if you knew that.
Yes, my favorite children's book. Getting into my Greeks at a very early age. I have my little guy reading that every night before bed so he can learn the difference. Yeah. The evil theta monster chases him down. It's a very scary book, but it's good.
It is. Actually, one of my goals is to write a children's options book one of these days.
Yes, for the huge 8-year-old option slinging market out there, I'm sure it'll be huge.
Exactly. Well, if I can teach an 8-year-old about income generation through the covered call writing, I can teach an 80-year-old. And the more people we know that are taught about how to produce income with options, the better. And to be honest, it actually might be easier to teach an 8-year-old about income generation than an 80-year-old or a 58-year-old, for that matter.
It used to be the old finance class in high school, and even earlier maybe was, balancing a checkbook. That's obviously very dated these days. Instead, we'll swap in some income generation, some covered calls, some strangles, some iron condor, delta management, all that good stuff.
Yeah. Well, I feel like financial advice is a lot is very barbelled. There's not a lot of people that are mediocre. There's a lot of people that are terrible and a lot of people that are good. And, that's why this show exists.
I get to see that in my little guy's kindergarten class. They have a snack break. Then they have some sneaky deltas. It'll be good.
Exactly. Exactly.
All right. And on that sneaky delta note, listeners, we're going to sneak right on into, we got time to let a few of you on board. So we'll sneak right on into the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys take over, make your questions and comments known to us as well as to your fellow listeners. No shortage of ways to do just that, including, once again, the mothership, theoptionsinsider.com. Hit that website feedback form, post a comment on the show notes. We'll make sure to route it to the appropriate show. Hit us up on social media, twitter.com/options, facebook.com/theoptionsinsider, and we're also Options Insider on StockTwits, so hit us up on any of those. I know a lot of you like to do that, particularly Twitter. Twitter seems the platform du jour for whatever reason for a lot of our options listeners. And of course, the old-fashioned way, questions at theoptionsinsider.com. Be sure to put question for the option block somewhere in there so we know where to route your question. Let's see. First off, we got an interesting one from Evan J. He writes, are there fundamental differences between the European and Asian options markets versus the American options market? Interesting question there, Evan. There's a lot of differences between those two, or those three, as I should say. Starting off with the fundamental recognition that the deepest, most liquid options market you're going to get anywhere in the world is, of course, here in the States. That's why there's just so much volume, so many of the overseas clients. We always joke on some of our other programs about the French clients trading SPX and others, but still, the deepest products you're going to see across the board are always going to be here. But there are some little differences in addition to the titular American versus European exercise style that's really just a more of a contract spec thing than an actual fundamental of the market. But in terms of volume, of course, there's more here. And interestingly enough, particularly in Asia, there's less penetration. Of course, talked last year about how China was going to come on board. Everyone was waiting. It was about almost exactly a year ago. It was April of last year when China was supposed to come on board with their first really big listed options exchange. That, of course, was punted down the road. Here we are a year later. We still don't really know what's happening over there from a Chinese perspective. There's a lot of talk that the government is very scared of retail coming in and overly speculating using options because there is somewhat of a gambling culture over there in China. And so they're considering things that would really clamp down on options usage, like making multipliers for contracts absurdly large, 1,000 and more, compared to our standard 100 over here in the States. So those are things that are still being worked out. Of course, there are thriving markets in other areas, Singapore and others, that you can go play in. But there is also a thriving warrants market that we don't really have here in the States, at least not to that degree, that is pretty robust in Asia and to a lesser degree in Europe. Warrants are very much a poor man's option, but they suit a lot of the purposes that options trader may otherwise need an option for. So that has kind of pilfered some of the volume overseas as well, particularly in Asia, which is one of the reasons why we haven't seen such a huge uptake over there. And of course, the fact that China has been essentially a no man's land for options. And hopefully that will change sometime soon. But those are some of the major differences. Maybe, Mr. Viceroy, we'll start with you. What are some of the other differences you can think of that you want to point out to our friend here, Mr. Evan J?
Well, Mark, I think you pointed it out. Markets dominated by the banks tend to be more of a warrant market because the banks are the issuers. I've taught options in most of Asia and the major capitals of Europe. I've taught in Frankfurt, London, Paris. In Europe, they've been trading options a lot longer. Amsterdam really was the center of options trading, and a handful of those firms are here. I remember going out, you talk about the reluctance in China. I remember going out for the opening of the Kuala Lumpur Options and Financial Futures Exchange. Big gala. I was out there with the chairman of the CBOE and much of the CBOE board, and the first trade, I think, occurred 8 years later because of politics. And politics play a big role. In Australia, the option market was almost decimated a number of years back by the trading of the CFD. And so politics is a big part of it. It's what other instruments compete with options and who sponsors those instruments. But little by little, options trading in most of Asia, most of Europe, is still very biased towards American big cap and American technology stocks. It tends to be the Intels, the Googles, and when they're active, those markets tend to be active. The other thing is you have cross-pollination of the market-making firms. I've taught repeatedly for Schwab in Hong Kong, and Hong Kong, as you can imagine, was the financial capital of Greater China, and on the same floor were the market-making firms of Timber Hill and Spear Leeds, and they were the primary market makers. Market making is more distributed in many of those markets, not as concentrated as it is here. And I think that also has to do with the fact that the technology costs, because there are multiple exchanges here, were so much higher that there was kind of a technology race. But the appetite for options doesn't end at any border. People want to trade this stuff. And I remember going out to Singapore and being in a cab, and the cab driver saying, "What are you here for?" And I told him I was doing some option seminars. And he pulled the cab to the curb, and I figured I was either going to get thrown out, mugged. But he started to draw a payoff diagram and wanted to talk a strategy. So the appetite is worldwide.
So we love having Alex on the show. Only he would throw in a reference to the Kuala Lumpur exchange opening. I love it. Your knowledge is deep and broad, sir. So well done. That's a perfect question there for you. Great question there, Evan. Keep them coming, everybody. We have to keep on rolling, though. Right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the name implies, this is the portion of the show where we tell you what we're keeping an eye on for the rest of this week. A little bit of a recap here. We started the show, I should say, talking about some names, including Caesars, that had some earnings after the bell. Caesars exactly unched here in the after hours. So all you premium riders probably a little bit happy right now for all of you out there slinging size out there in Caesars, however many there may be. In terms of the rest of earnings, not a heck of a lot. Still focused primarily on the remaining retailers. Got Best Buy tomorrow. A lot of people have been watching them of late. They're doing some interesting things with changing their layouts of their stores and actually allowing other firms to kind of come in and set up mini stores within their stores. It's kind of an interesting idea, certainly a way to make the floor space they're paying for actually have some value to them. You got a good old Abercrombie, the tween clothing retailer, coming out on Wednesday, as well as Costco, Kroger on Thursday, and Staples on Friday. So if you're heavy on the retail side of the fence, this is another big week for you. Aside from that, maybe Mr. Sebastian, we'll start with you. What are you keeping an eye on for the rest of this week, sir?
Well, obviously, we've got non-farm payrolls coming up at the end of the week. I think that's going to be a big driver. The big number is not going to be how many people were hired. It's going to be what were they paid, what were their hours worked, because that's really what everybody's watching. There's still tons of slack in the labor market. It's just whether that slack in the labor market is starting to tighten, that wages really start to rise. And I'm not talking about Walmart giving people a $2 raise. I'm talking about real wages in kind of the higher income, middle income levels where there's skill required. So that's going to be kind of the key. A lot of people are going to be Fed watching for the rest of the month. March is actually traditionally the worst month for the VIX. In terms of it's most likely to have its biggest rally. So, it's kind of an interesting period we're watching. In addition, Costco, kind of interesting. I have to admit, I was shocked this morning when they said they were going to use Visa for their vendor. I think with Visa being probably the biggest of all the credit card vendors, it'll be interesting to see what effect that has on their Costco's internal credit card business. So, I'll be kind of interested to listen to Costco earnings. I don't think that's going to be anything this quarter, but I'm going to want to hear about their comments about this new credit card deal. On the week, I do think we're going to continue to grind higher. I don't know. I'll be interested. I'm going to see if Alex calls for an 11 handle this week.
There you go, Alex. The ball is in your court, sir. What are you watching for the rest of this week, and what are you predicting from a VIX cash perspective?
I'm going to pick up the challenge, and I've called for a 12 handle, but I am going to call for an 11 and then a 10 handle, and I think that's as low as it's going to get. Nasdaq 5,000 was kind of a non-event. I think that's part of the world of electronic trading. I remember when there were physical desks, and hats would go up, but I think we're going to grind higher. I think Nasdaq is going to have a little problem here above 5,000. I think it's going to dip back, but I still think we're going towards S&P 2250. Watching crude, watching VIX, watching the 10-year. Once again today, we had remarkable volatility in our 10-year. On yield today was about a 65 realized vol. Watching the German and the Japanese 10-year trending towards zero. That continues to amaze me. In terms of the sovereigns, we are right now about the highest yield of, I'm not counting the old Eastern Bloc countries or Greece, but you look at Germany, Italy, Spain, the UK, Japan, we are the highest yield, and we're 6 times the yield of the Germans and the Japanese. So interesting things going on in the bond market. At some point, this bond market is going to have some distress this year. Rates are going to go up. I don't know when, and I would have bet all of last year the rates would have gone up, and they didn't. But I think we're going to grind higher. I think vol's going to continue to come in. I'm kind of interested to see how this new early session of VIX, which gives Europe the ability to be in, plays out. I will once again point out that when CBOE wants to trade after hours, it can in its proprietary products. Come on, guys, do it in equities. And that's what I'm keeping an eye on.
And last but not least, Uncle Mike, take us home, sir. What are you watching for the rest of this week?
Everything that was said, and then just getting geared up for the big news next week with the fruit company, with the iWatch, everything along those lines. And just to add to what Alex said with bonds, TLT looks like it could have a chance of going negative on the year over the course of the next few days. If we have another down day tomorrow, TLT might actually be in the red. So a lot happening, folks.
A lot cooking. Unfortunately, that's all it's cooking for us here on the old program. But before we go, as always, let me check in with each of my cohorts. Maybe we'll go back around the horn this time, starting off with you this time, Uncle Mike. What's cooking in the land of RCM Wealth Advisors?
Minneapolis on March 11th, rcmfutures.com for more information. We are having an event up there. Check it out.
It's close enough to Canada, you can say check it out. I think they would understand what you were saying as well.
Oh, yeah.
A little scary how easily you slipped into that, sir.
Yeah, hoser.
All right. And Mr. Viceroy, what's cooking in the land of OX education and live events?
I love Minneapolis. I think one of the biggest customer seminars I ever did was in St. Louis Park, and I had about 700 people at a customer seminar. But enough reminiscing. Live event this Saturday, Jimmy Rouzan and his crew live in Denver. In terms of webinars, I got 2 pages of stuff, so I'm not even gonna list many of them. I'll focus on one. This Thursday, the 5th, Dan Gramza, my buddy from the CME, is going to do an analysis of future trends using MACD. All of the events are free, the live events, all the webinars. You can hit the Education Center. Just come to optionsexpress.com. Click on the free education tab. It's in front of the login. And all the events are free. Come see what's available.
And Mr. Mark, last but not least, what's coming down the pike in the land of the option pit?
Well, I'm going to be at the CBOE Risk Management Conference this week. I'm going to be doing some reporting for TheStreet.com and, of course, the Options Insider. So be excited for all the cool content and the reporting I'm going to be doing on all that I'm learning about the volatility space in beautiful Carlsbad, California. As well, we had our Creating Income with Options on Saturday. It was an awesome event. We had a great time. Ton of people there. If you're interested in getting the recordings for the event, shoot me an email, marketoptionpit.com. And but yeah, so looking forward to doing some fun work with you this week, Mark.
Yeah, I wish I could hit that event, but unfortunately I'll be heading to the other coast next week for the other big event, the FIA show down there. So I'll do RMC and FIA when they're back-to-back on the same coast. When they're bi-coastal like this, I tend to have to pick one over the other. But I'm glad you could head out to the other coast for us and investigate all that fun VIX premium studies and strategies and sessions. And it's just a great conference to go to and just chat with other people who are knee-deep into VIX and BXM land. It's a cool one. So check it out and look for good stuff for us coming this week from that event and from FIA the following week. And on behalf of Uncle Mike and Mark and the Viceroy and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program. And I'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.